Herman Chan, we're going to talk banks, and Herman Chan is here. And whenever people see Herman Chan, they're like, is there a regional bank melting down?
Because that's what I was like, do I need to be concerned?
Silicon
because I
Valley
haven't met Herman yet, but is there like a
First
dark
Republic
cloud
Bank.
around
Whenever
him?
he walks into the studio, it's like...
He's very cheerful.
Okay, well...
You have to be stoic to be the Grim Reaper.
I love this. Well, we are talking banks because Wall Street's biggest banks are set to report earnings next week, starting with Goldman Sachs on Monday. It has been actually a tough quarter for the six giants so far. The KBW Bank Index had its weakest quarterly performance since 2023. Strong earnings could spark a rally next week. We are joined by Bloomberg News senior U.S. bank analyst Herman Chan. Christina Aquino is also here. She's managing editor for Bloomberg Markets Live blog. Herman now covers the big banks as well as one of the team leaders for Bloomberg Intelligence. So Herman, I do want to start with you. And you know, when we talk about the banks, we often talk about, okay, what moves the company's stock? You know, what is trading revenue going to look like? I'm not interested in that right now.
Sure.
I'm interested in what consumers are telling the banks that they're doing in a higher energy prices environment, in a higher inflation environment. These are the companies that see what we're spending our money on at that exact moment. What are they going to tell us?
Right. So they're going to tell you that they're spending more on gas prices at the pump over the past month or so. So that's going to be front and center when they talk about the consumers. I think you're also going to hear about a resilient economy because we're still seeing a lot of GDP growth still chugging along. But there is going to be the question, are the higher energy prices going to create some cracks in the consumer side?
Well, I think the challenge between this conversation that we're having now versus what the conversation that we had about this in 2022, the last time we saw inflation like this, was consumers still had that cushion post-pandemic.
That's right.
That's not still there.
Right. So the savings rates are much lower than they were, and you don't have the sort of stimulus that was propping up the consumer back then. So there are some questions on where things are going to go. Going forward, but we'll hear more about that over the next few weeks because that's going to be front and center for earnings across the board.
And Christine, we want to talk to you about the markets at large and kind of what I've been calling this indefatigable, possibly delusional optimism we keep seeing. But before we do that, I want to talk to you about crypto because we saw Bitcoin and others fell 2% last night after this negotiation in Islamabad fell apart. And my question for Tim, and he said it was actually a good question, I should ask it at the table, this morning was, I thought crypto was supposed to be more insulated from being reactive like this. I thought it wasn't supposed to be this fluctuate. Like, what's going on there? Why are we seeing such a reaction from cryptocurrencies?
I mean, you know, when you see a catalyst as big and broad-ranging as the war in Iran, it really just throw away all of your preconceived notions about what is a haven and what is not a haven in this market. I mean, you know, ultimately, crypto is still probably considered a riskier asset than all the traditional assets that we have out there. And so when something as acute of a risk aversion event hits as the war, then really the first port of call that people see to sell would be riskier assets such as crypto. And I think, remember, you know, it's had such a massive rally over the past year, and then, you know, issues started coming through even before the war started. And so I think now that you got this geopolitical catalyst, that kind of just piles on the pressure, and that's what we're seeing at the moment.
Are you seeing sectors that are still holding up as havens? Where are people still investing with this uncertainty, or is it just all over the place?
I mean, you know, the price action over the past couple of weeks has been very interesting. Even the energy, for instance, hasn't been insulated because while higher oil prices, in theory, good for energy companies, I think now, because of that potential hit to consumers, they are also starting to feel that bite in that demand side of the equation. And then, you know, I think things obviously like consumer stocks have been very much at the forefront of getting hit. I think, you know, things like big tech still acting actually as a relative haven within the equity space, just because these are big companies with a lot of cash. And during times of turmoil, such as what we are in now, investors do tend to flock to companies that are unlikely to go bust anytime soon.
You brought up the volatility volatility that we've seen, a good segue to go back to Herman on what that does for the banks and the way that traders navigate this volatility and how that could be a boon for the bottom line. What do we expect this week?
That's right. So we are expecting a big jump in trading revenues, both on the equities and fixed income side. You mentioned volatility. That's actually a helper for the month of March, given all of the uncertainty in the markets, especially in areas like rates trading and businesses that were affected by the uncertainty. So banks like JP Morgan, Bank of America that have more FICC revenues should bode well for them for the first quarter.
And Kristine, just to kind of bridge our guests here, how important are bank earnings to markets, and where do you see that really reflected the most?
Extremely important, Christina. I mean, we're going to be watching it very closely as well. I think, very much the steer for the rest of the market is, how much has this volatility kind of created opportunities for banks, but also the consumer response, as Tim was alluding to, because that is going to be a very important signal moving forward. I think at the moment, investors are kind of, they've digested the lay of the land at the moment, right? Higher oil prices weighing on everything else. Now we're waiting for that second order consumer hit and what that's going to do to consumption and just consumers' ability to spend their money, if they have any money left, moving forward. That's going to move a lot of market sentiment from here on out.
So, Kristine, if we play out Christina's question regarding Bitcoin, the one thing we can watch is JD Vance comes back to the United States after, I'm not going to say failed negotiations, but the war is not over at this point.
Unsuccessful.
At this point, I think that's fair to say. 100%.
They didn't. We didn't reach a deal. That's how markets are treating it. Yeah.
Well, so how do markets treat it? How does oil look tonight? How do risk assets look tomorrow?
Yeah, I mean, I think the balance tilts back toward that sort of risk-off reaction, right? I think a lot of what we've seen in markets has been very much a function of oil prices, and we have seen oil prices pulling back below $100 a barrel last week. So at minimum, that's probably going to be the first order reaction, higher oil prices to start the trading week. And that's going to just drive the rest of market sentiment. Stocks have been negatively correlated with oil. So meaning higher oil prices probably going to mean weaker stocks to start the week at the very least.
Herman, we've only got about 30 seconds, but I do want to ask you about this Jamie Dimon letter to shareholders on Monday, where he kind of urged America to get back to basics and calmer politics.
Right.
Those two streams, they usually try not to cross them. But is it getting to a point where they've got to say something because it's impacting the bottom line?
Jamie's sort of a spokesperson for the banking industry, and
like shove him out front, Jamie, go say the thing. Okay.
So the letter was very wide-ranging. Mentioned geopolitics, mentioned the war, mentioned also the American dream, and also the importance of creating a very strong military for the United States as a whole. So it's something that he does do a lot of prognosticating on, and the industry is better for it.